Bitcoin is on the verge of collapse below 26.8k, which could potentially push the prices aggressively toward the downside. With very poor economic data from CPI to PPI, we have seen the macroeconomic narrative potentially begin to shift. What impact could this have on the 4-year cycle and higher time frame price action? These are questions we're going to be answering today. Let's go ahead and get stuck in. Okay guys, welcome back to the channel. Thank you so much for tuning into today's video. Bitcoin is hanging on for dear life at 26.8k. This level is a significant level of support in which, if lost, will result in a strong correction towards 25.2. In today's video, we're going to be talking about the macro price action, discussing the 4-year cycle, its higher time frame targets, and even the possibility that the 4-year cycle will fail. We'll be talking about the macroeconomic data and how the narrative is potentially shifting towards a bearish outlook. We'll be discussing the smaller time frame price action and the 26.8k level and the possibility for a breakdown, as well as a technical and structural analysis for the daily and weekly charts. Before we get into it, smash the like button, hit the comment button, and of course subscribe to the channel. We focus on the charts, the facts, the structural and technical levels, guys. No emotion, no hype, no BS, pure raw TA. If that is all you're interested in, smash the like button. And of course, guys, join us on Telegram. We give you all of this and so much more. You'll get access to charts, updates, analysis, information, news events, educational posts, and so much more. The second link down below. If you are interested in trading signals with exact entries, exact targets, exact stop losses, charts, analysis, additional content, join us on Telegram via the VIP channel, via the pinned comment. You can get access to our main channel over here, and of course our group chat. You'll get access to all of this stuff over here, and you can find our entire trading track record via this link. If you're interested, go ahead and click this button to contact me now. Let's go ahead, guys, and get stuck into the video, because today's video is going to be not only an incredibly important one, but it's going to be quite a big one. So let's start off the market data. Currently for the month, May is down 8.09%. Sell in May and go away seems to be quite true this time around again. We see 24-hour liquidations are down 47%, sitting at 98 million. By no means is this a small sum. It is quite high still. Our 24-hour volume is sitting at 79 billion, down 24%. Again, still relatively high. Our 60-day volatility index is 2.42 on the decline. And of course, our 30-day volatility index is 2.11. It is steadily on the rise. As for these liquidations, the majority of liquidations in the last 24 hours has been from longs, and the last 48 hours once again has been from longs. So longs are definitely getting wrecked here. Not only did they get trapped on CPI data, but it looks like they also got trapped on PPI data on that pre-news event rally, and we'll discuss that in today's video. The DXY has broken out of its downtrending resistance. Guys, this is big, and we'll talk about this when we talk about the 4-year cycle a little bit more. This is stating that the US dollar is starting to gain relative strength. Now, this is incredibly bearish for asset prices, because if the US dollar rises in value, asset prices in relation to the dollar do start to drop. This could be a sign that we're starting to see the macro shift or macro direction shift bearish. And again, we have been noticing these weaknesses, these zones of weakness and these indications of weakness for quite a few weeks now, but now we are starting to see the pieces of the puzzle fall into place. It is not a good sign, guys. As you would know, the DXY continues up here. That is going to send the markets down. How much are they going to go down? We'll try to answer that today, but the general trajectory is going to be down. Of course, if the DXY does fake out of here and crash back down below this line of support, we can expect the markets to rally, but right now, above this downtrending resistance, it is not looking ideal for crypto. It is not looking ideal for the stock market. Now, you're wondering why this has gone up. We're going to talk about that when we talk about the 4-year cycle, but again, the strength of the dollar is heavily tied to the cost of debt, and the cost of debt is heavily tied to interest rates, and interest rates are heavily tied to inflation. So we do see inflation start to rise. We do see a domino effect that goes all the way along that eventually affects the dollar. And we'll talk about that in today's video. The S&P 500 has seen a little bit of a bounce overnight, recovering from most of its dip from yesterday's PPI news, but nothing too significant. Again, we are in a bearish structure. This is a rising channel formation. Eventually, rising channels do ultimately break toward the downside, guys. For a measured move target of this rising channel, we take the first high to first low, apply it to a projected breakdown point. That could potentially take us back to retest these low points at 37 to 3600. Now, if the S&P 500 does break upwards, we're going to need to break through this 1 year long horizontal resistance, which will push the prices up to retest 4,300. For that to happen, the DXY is going to need to crash. And for that to happen, you're going to need to see the current shift in narrative, which we'll discuss in later on in today's video. We'll get there, revert. Okay, so a lot needs to occur. Same goes for the Dow Jones over here. We do have our uptrend dotted line. If that level is lost, we could potentially see a higher time frame crash towards these lower levels. We're looking at around 30,000 to 29,000. And again, we do need to see a break of this resistance to flip the trend in a macro uptrend. Remember, that macro uptrend for the traditional indices here will resume above this red box. Above here, we are in a macro uptrend. Right now, we are still underneath this macro resistance for the Dow Jones and S&P 500. Bitcoin, let's go ahead, guys, and get stuck into it, because there is a lot to discuss today for the Bitcoin chart. So, on the daily chart, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. We can see Bitcoin has now officially completed 3 of our 3 requirements for a daily trend loss. We have officially lost the daily uptrend as per today's candle. We have seen, number 1, a loss of the 50 EMA, a loss of the midline of the Gaussian channel, and we have seen now a breakdown of 26.8 to 27,000 on the daily. We have officially lost the daily uptrend. A 1-day candle close will need to be done to confirm the breakdown from this level, but as of right now, we have lost this uptrend. It is looking very, very grim for Bitcoin, and like I said, we are going to see volatility increase. You're going to see the speed and velocity of price action increase if this level continues lower. But we'll come back and talk about all of this after we get down to the macro. So, the 4-year cycle, a lot of people are going to start to question the 4-year cycle again as the prices begin to drop. And as you would know, we bought Bitcoin at 16,500. We sold Bitcoin on this deviation just at around 30,000. But the 4-year cycle is again a reflection of the macro trend of Bitcoin. Now, what is the probability of the 4-year cycle actually breaking? And we're going to answer this before we get into anything else. There is a possibility that the 4-year cycle breaks, but to understand what that is, we have to understand what the main drivers of macro price action are. So we have drivers of price action. The drivers of price action are economic, political, and societal. These are our drivers of price action. Societal being societal perspectives, such as when the banks were collapsing, Bitcoin was rallying. they put faith in Bitcoin over traditional banking markets. They use it as a hedge. So the societal influence pushed Bitcoin prices up. Political ties into economic, okay? We have such as certain policies, restrictions, taxations. All of these can be put in place to suppress people's access to these asset classes or dampen the desirability of these assets, or vice versa, make them more desirable. Alternatively, political decisions can also influence the rate of which economic decisions are made, when they are made, and how aggressive they are actually made, which directly influences asset prices. Finally, economic is the main driver of macro direction, as economic policies and decisions directly influence interest rates, and interest rates directly influence the macro direction of price action. Now, you're probably wondering, why am I going into so much detail? Because if we want to understand what is happening right now in the market, we need to understand that. We need to understand that interest rates determine the macro direction of asset prices. They don't tell us how much something is going to move, they tell us the direction of which something is going to move. And the reason why all of this is very relevant is because the news events that we had this month, the main news events that we had, and I'm going to go ahead and scroll up to them over here. We had PPI, we had CPI, we had an NFP, and we had our FOMC decision. What we can see from these users, I'm going to put them on the side over here. We can see that our PPI increased. It rose by 0.2%. Our CPI month on month rose by 0.4%. Our NFP had a result of plus 253,000, much higher than the estimated 180,000. And of course, interest rates rose by 25 with no mention of a pivot. The narrative is shifting. This is indicative of worsening economic conditions and rising inflation. If we see month-to-month inflation go up, it is indicative of rising inflation. If we see PPI increase by 0.2%, it is indicative that consumer prices could potentially rise as producer price indexes has risen and producer prices generally get pushed down to consumers. And finally, the Federal Reserve announcing a 25 basis point hike without mentioning any sign of a pivot and potential continuation of 25 could result in an increase down the line. And furthermore, the rapid surge in job growth is not a sign of economic strength. It is a sign that the economy is growing too fast as a result of stimulus. And the stimulus was that the government decided to increase economic expenditure again, or increase monetary printing due to the banks collapsing. They have kick-started the economy too quickly, and we are starting to see asset prices drop, and we are starting to see CPI rise, which potentially have a lot of a lead-on effect. Now, if CPI does rise, this is a leading indicator for future interest rates. If interest rates rise, the cost of debt rises, and if the cost of debt rises, guys, available household expenditure decreases, asset prices fall. Companies are more willing to reduce their exposure in the financial markets because their assets are falling in value, decreasing their future cash flow earnings, and this brings asset prices down. So the possibility for the 4-year cycle to make a new low or be invalidated is entirely dependent on what happens with interest rates. If interest rates start to move back up, we will see the 4-year cycle invalidated. We will see prices create new lows. But until then, the 4-year cycle is very much intact. What we can see with the 4-year cycle, we can see 3 points of interest. Number one, the crossover from gray to green, which is the entry into the date range bull market. Number two is the dotted trend line. And number three is the horizontal red trend line. All of these points are of macro concern. The horizontal red trend line represents the yearly low of the prior cycle. Every single time a monthly candle is closed above this point, we end up officially breaking into a macro uptrend. So what we can see over here is we just got rejected from that higher time frame resistance or that higher time frame trigger. So we actually are not currently in a macro uptrend yet. We need to break a monthly candle above to enter a macro uptrend. Every time we do so, we end up rallying towards a dotted trend line, which you can see is going to be the first high of the dead cat bounce in the bear market. In this instance, is 48,000. Once we break through the dotted trend line, which always happens after a rejection, we do end up creating an all-time high and going upwards towards a new all-time high. So for all of this stuff to validate, we need to see step number one complete. And step number one is a monthly candle close above 30,000. We do have quite a fair bit of time before we need to see that. Of course, according to the date range trend, we're not expecting to see any of this kind of stuff happen until around March 2024 to April 2024. So there is a lot of time for a potential pullback or a short-term pullback or a monthly or 2-month pullback before we see any of this develop. But again, the 4-year cycle is intact until it is not. And if we do create a new low after a rejection from this point here, that will invalidate the 4-year cycle. The 4-year cycle will be invalidated. The 4-year cycle will be officially broken if we lose this prior low after we have rejected from 30,000. Keep that in mind, guys. Let's go to the high time frame technicals and then go back to the daily and then talk about the short-term price action, as it looks like Bitcoin is already making its way down. So this chart over here has been absolutely clutch, guys. This chart has been phenomenal at predicting drawdowns for Bitcoin, and as you can see, since our last prediction, we're down around 10%. What it is a weekly momentum shift, and we use the 62 point on the RSI as a horizontal trigger point for this shift to occur. Every single time we have lost the 62 on the RSI, we have seen a significant pullback for Bitcoin. In January 2018, we saw that RSI shift, we saw a 70% pullback. Back over here, guys, in August 2019, we saw the RSI shift, we saw a 65% pullback. In this instance over here, we saw a 20% pullback. In this instance over here, we saw a 49% pullback. And finally, it even helped us identify the bull market top and beginning of the bear market, which eventually resulted in a 70% pullback. We have officially seen that same signal occur a few days ago. And we talked about it about 5 days ago now, and since then, Bitcoin has actually dropped a whole 13%. Every single time we see a shift, we enter a down phase. We enter a drawdown. This drawdown is generally large. It is generally a large drawdown. The smallest drawdown we have seen is 20%. This could mean a 20% correction from that top could take us down to retest 24.4, which by no coincidence is going to be that major daily horizontal support that we have been discussing over here. We'll come back to all of these charts in just a moment. Like I said, today is going to be a slightly longer video. We have a lot to get through. Let's go ahead and run a technical analysis on this chart, guys. So bringing up a few things such as a Gaussian channel on the weekly. As we can see, guys, on the weekly chart, we have failed to break through the Gaussian channel's upper band. Now, if you draw a horizontal trend line from 25.2 to 24.4, you can see the lower band of that Gaussian channel is actually lining up with the horizontal support, and therefore we are looking at support at 25.2 before we continue up and out of this band. Until then, guys, we have of course rejected from that point, which is a very, very bad sign. If we do end up breaking back below the Gaussian channel, that will be confirmation of a new low before we actually see a new low. Where would that occur? It would occur around about $20,000. So if $20,000 is lost, we are more likely than confirming a new low. So the Gaussian channel on the weekly is not looking ideal whatsoever, guys. On the 3-day, we had seen that breakout as we've been discussing. We told you months ago, every time we enter the Gaussian channel, we end up pushing through the Gaussian channel, which we have seen. You can see the uptrend of the Gaussian channel is turning upwards. It is going to act as a temporary support. And again, we could potentially meet that uptrend as the Gaussian channel moves up through that horizontal trend line. So we do have points of confluence here on the chart that we will definitely be looking at. Let's go ahead and take a look at the market cipher B, guys. The market cipher B on the weekly chart has printed a red dot. This red dot is a sign of decreasing positive momentum. So we have positive momentum because we're above the point 0. So this is positive momentum. The red dot signifies a shift from rising to falling. We have falling positive momentum expressed as weakness in the chart. Every time we have seen a red dot, we do generally see a strong pull down. Now, not every time. In this instance, we did see a bearish divergence, but it was soon followed by a strong pull down. Again, every single time we see these red dots, we generally do see strong pull downs, as these red dots, guys, They signify a shift in momentum. And as you would know, momentum is a leading indicator for volume, liquidity, velocity, speed of price action. All of these characteristics make up the strength of price action. So momentum starts to shift. We know that these characteristics are turning bearish, and these characteristics are turning bearish. We have bearish strength. We have weakness in the trend, which could potentially develop into a correction. The higher time frame indicators are now starting to look quite weak. Let's take a look at the moving averages of the 50 EMA, and then we'll get into a smaller time frame. So the 50 EMA, I want to take a look at the 200 EMA as well. So the 50 and the 200, as you can see, the 50 is of course quite good over here. It's underneath 200. Like we said already, for us to be in a macro uptrend, we actually need to see the 50 cross over the 200. But of course, it doesn't look like that's going to happen anytime soon. We do have the 200 coming up over here, and the 200 is going to be providing support at around 26,100. So we're looking at 26,100 for a possible bouncing point for Bitcoin. Let's get into this day trend and then get into the small time frame price action. So it looks like Bitcoin is on the way down, guys. So really quickly, daily trend, we have lost the 50 EMA. We have lost the midline of the Gaussian channel. We have broken down from the $27,000 range. We are entering a low volume range over here. Speed, velocity, volatility, all going to start rising. And of course, we have temporary support according to the upper or the lower band of the Gaussian channel, which is 26,100, which matches the weekly 200-day moving average. If that level is lost, we can almost guarantee a correction into this chunk of volume over here, which is sitting at 25.2 to 24.4. How can the bulls reclaim control? Two things. Number one, a monthly candle close above 30,000. Number two, the RSI needs to be broken. This downtrending momentum needs to be flipped. If the RSI is able to break through this downtrending resistance over here, the momentum is going to flip positive. If the momentum flips positive, the characteristics of price strength move upwards. Volume, liquidity, speed, velocity, all of those things flip positive. If those are positive, the price strength is positive, the trend direction is upwards. Until that happens, we are going down. I've been warning you guys for weeks. This entire time I've been saying, actually even over here, I've sold my Bitcoin at 30,000. The market is weak. We are seeing weakness at resistance. We are seeing bearish divergences. We are seeing discrepancies between what the leading indicator of momentum is saying and what the price strength is saying. This discrepancy is a sign of weakness and could result in a correction as low as 25.2 to 24.4. Since then, we have already seen a strong correction of 14%. Absolutely huge. Resistance is resistance until it is not, guys. Do not fool yourself. Now, one more question I want to answer before we go into a small time frame. What would confirm Bitcoin losing the weekly uptrend? Because we have now lost the daily uptrend. The daily uptrend is over. We are now moving into a daily downtrend. We've officially started a daily downtrend. A weekly uptrend is still intact. The weekly uptrend is still intact, but it is definitely weakening. We're starting to see the RSI came down. We saw the market cipher B, the red dot print on the higher time frame on the weekly, very negative. But the weekly trend is intact until 24.4K is lost. If 24.4K is lost, that will put Bitcoin back into this deviation range between 24.4K and 20,000. If Bitcoin breaks into this range, we are back in a neutral horizontal consolidation, which puts us at massive risk of a higher time frame correction and new lows. New lows are confirmed underneath 18.4K. If 18.4K is lost, new lows are confirmed. Where are our new low targets? We're looking at 13.9K to 12,400. This range right over here is going to be the target if these levels of loss. What are the probability of that occurring? Relatively low. I think it's quite low. We see new lows right now, unless the narrative in the macroeconomic position, according to the data, changes. If interest rates start going back up, the probability for new lows increase. If they start going back down, the probabilities for new lows decrease, okay? To look at it like that. Look at the drivers of price action to anticipate the macro direction. Finishing up on the smaller time frame, guys, we can see Bitcoin has finally broken down from this horizontal level. A huge drop so far, moving into this low volume range. It is looking incredibly bearish, guys. If we do see this range gap over here clear, that takes us to 25.2 to 24.4k, guys. It is not looking ideal right now. The 12-hour chart, we can see the price is underneath the 50 EMA. We can see the RSI is on the downturn. We can see that momentum, according to the market side of the B, is in the negative, and the price action is pushing through a low resistance range. As we said already, if we see a break of 26.8k, we are entering a low resistance range, meaning volatility, speed, and velocity of price action will increase. And let's take a look at the hourly chart. We can see we have dropped through that level, and we have already seen quite an aggressive wick that took us down nearly a whole % in less than an hour, guys. So we are starting to see the price action gain strength. The bears are taking over, and the price is not looking very good. I would be expecting, on the smaller time frame, possible bounce levels to be around these horizontal levels, these psychological numbers. Look at these jumps in the VRPV. Look at these gaps. 26.1k I'd be expecting as a primary support, a possible area in which the price could be bouncing from. This would be my first target. If 21.6k is reached, I'd be then looking for a possibility for a bounce. If the bounce doesn't occur, I'm then looking for a continuation lower. For the bulls to take back control, we need to break this downtrending resistance, and like I said, that daily RSI trend line needs to be broken. This daily RSI trend line needs to be broken as well. The price has to get above this diagonal trend line and start to close some candles back above 30,000 for the bulls to reclaim control. Until then, guys, if we invert the chart, you can see a very bearish chart right here. We had an uptrending support line, which we bounced from numerous times. We have broken through a horizontal resistance, which has lasted the course of about 50 to 60 days, and now we are entering a low volume range of our next chunk of resistance right over here. It is not looking good. The bulls are not in control. The bears have been in control now for a couple of weeks, like we've been saying, and expect the worst if we do continue down. Thanks for watching, guys. I hope you enjoyed. If you've got any questions, leave them down below. If you've got any suggestions for tomorrow's video, let me know, and I'll see you guys then.